What's up, everybody? It's Kevin here from Stock Hours. Today, I'm going to be bringing you guys a very special video for a trading strategy that's going to help a lot of you beginners out there. This simple strategy is going to help a lot of you beginner traders out there know what to look for in the markets in order for you guys to begin growing your portfolios. Without further ado, let's get right into the video. In order to play this strategy, there's three things that we need to take into account. Number one being levels. Levels are just required for us to know which level we're trying to play the breakout of. Number two, we need trends. Trends are important to us because they can help give us confidence into a setup, or it can tell us to stay away from a setup. Number three, we have divergence. We already have a video explaining divergence, so I'm going to put that link in the description below. But to quickly summarize, divergence is pretty much when we compare the stock that we're trading to the overall market, for example, SPY versus Meta, and we're basically checking to see if Meta is ahead of the market or doing its own thing. And what we mean by that is to see if both SPY and Meta are pushing at the same time to the upside. We want to see Meta being stronger than SPY when it's doing that. That's just a quick little summary. The video in the description below is going to have a better explanation of it. Alright, so I'm going to show you guys how you guys can find these levels and these trends. So for levels, what we're looking for are pretty much levels that have been tested twice, but haven't been closed above or below. These are the levels that we're looking for. The baseline for these is 2 tests, but more tests is even better. So I'm going to show you guys a quick example here, going throughout the daily time frame. When you guys are making your trading plan, you guys always want to start out on the daily, the 4 hour, the 1 hour, 30 minute, 15 minute, 5 minute, and then 1 minute to see whatever you guys can find in terms of levels and trends. Like I said, we're looking for 2 tests at least. Right here, I don't see anything close by. So I'm going to come down to the 4 hour. Right here, I notice that we have a consolidation here. And if we zoom out a little bit, you can kind of see that we also have a trend forming right here. Starting from this low, right? It only has 2 touches, so I wouldn't really consider this a trend. What I would start to consider things as a trend once it has at least 3 tests. So coming down to the 1 hour, we still have no levels or trends, but what do we notice here? In that consolidation on the 4 hour time frame, we can see right here we tested a level once, twice, and now this is the 3rd time. So I'm going to put a level right here at this low around 451. What I like to do is round these levels up to a whole number, because it's going to be a lot more easier to read on the tape, right? And then we're going to look for any supports and resistances. I already have these marked out just for a general area for a profit target, right? Sorry, I also missed another example right here. There's also two ways you can play this. You can play this to the upside or the downside. Right here on the upside, you could play 457. But let's play this trade out and see how it goes on the lower time frame. Right, so we are looking at either 457 to the upside or 451 to the downside. Let's just play this trade out and see how it goes. Okay, so we open up and we get a straight drop down towards our key level. Let's see how price reacts around this area. We get a slight little bounce here, and on the way back down, this is where I would take the trade, right before the breakout. So let me place an indicator for you guys right here. This is how I would play this trade. I would enter right before the 451 break, the level that we had, and I would have my stop loss set around here. And then I would be ideally targeting for this 449.50 level that we found on the 1 hour chart from the previous resistances and supports. And wow, look at that. That trade worked out perfectly. That was what? Nearly a 4 risk to reward trade. That's a solid trade to me. Our stop was tight on this trade and we had an amazing reward. So this trade was an amazing trade to take. Heading on to the next example I'm going to do with you guys, we have AMD right here. What do we have on AMD right here? Like I said earlier, we're looking for at least 2 tests. So what do we have? We have 1 test here and then another test here that we never closed above, right? So I'm going to put my level at the high right here, and it's 166.78. So what did I say earlier in the earlier example? I'm going to round this up to a whole number. The closest whole number is 167. So when the market opens, we're going to be looking at how price plays into our key level that we're looking at. That was a little bit fast, but if you wanted to take this, you could have taken it right here, and you would have to zoom out to find your stop somewhere. Where I would have put my stop is at this high day from Friday. So my stop would be around 55 cents, and then I would target the nearest resistance or support from the hourly or the 4-hour time frame. Or I could just read the momentum in this trade and see how far it can get me. Clearly, if we were to just play this based off of pure momentum, this trade was a crazy 3 risk to reward, which is just an amazing return for a great trade. Alright, so now I'm going to show you guys some examples. Here's an example that I found on Meta. Here's a flat bottom, and this is a great setup. This has 1 touch, nearly 2 touch, 3 touches, and we're looking at this 493 level. When we're taking this trade, we're really going to want to compare Meta to QQQ or SPY and see if Meta is weaker than the market. If Meta is weaker than the market, then that gives us a green flag to take this trade. So let me play this out. Meta pumps, then it comes back down. Get an imbalance candle right there, and then we start bouncing, and then right there it is. If I were to take this trade, here's how I would play it. I would enter right here before the 453 break. My stop, oops, wrong indicator. The way that I would play this trade is I would enter right before the 453 break, and then I would have my stop set around here, and then I would target this level from the hourly time frame that I got. And let's just watch it play out. That was a great trade. A lot of momentum in the weakness there. The stop was just $1, and our risk to reward was over 2. This is a great trade to take. Heading on to some other examples. Right here, I have a 4-hour flat top on Tesla, right? 1 touch, 2 touch, 3 touch, 4 touch. So let's put this down into the 1 minute. When we go to the 1 minute, same thing. We're watching to see if Tesla is stronger than the overall market. If it is, that's giving us the green flag to take this trade. So let's play this out. At the open, we get a push. And now we get close to our level. So the way that I would play this is I would have entered right here, and my stop loss would have been right around here. So roughly about a $2 stop. And this, I couldn't find any profit targets because we were kind of in uncharted territory. So I kind of have to target key levels like 210 or just read the momentum and scalp it. So I'm just going to put it at 210 just for you guys to see. And we'll play this back. And Tesla breaks right through 206. Perfect trade. Although we didn't get an amazing risk to reward on it, it was a solid scalp. So you could have definitely made money on this trade, even though it didn't give you the best risk to reward. Here's the last example I have for you guys. Remember what I said about trends. Trends aren't valid unless they have at least 3 touches. So look at this trend right here on Google. We have 1 test, 2 test, 3 test, and 4 test. 5th test here as well. On the 6th test, we broke aggressively to the upside. And then we stalled at 181, pulled back, tested 181 the next day, and pulled back again. So this confirms our 2 tests along with a trend line break into this level. So the next time we come into 181, as long as Google is stronger than SPY or QQQ, then I would be 100% interested in taking this trade. So let's come down to the 1 minute together. Let's see what's going on. So let's see how Google opens. Getting there. All right, Google opened. There's something I noticed right here is that we kind of have this trend forming. We have 1 touch here and then 2 touches here. So if we come back up to 181, I'm going to watch to see how price reacts near this trend. That's this potential trend, and see how it reacts. If it can hold above it, then I'll be interested in taking this trade. So let's see how this plays out. We get to the trend, and then we immediately reject. pull back, and then we push again. Now we test that trend again. And as you guys can see, it looks like Google's holding, and it looks like it's ready to break out of the trend. So what would I do when I see that it's holding 181? I would get in right here at the high of day, and my stop loss would be right around here, near this level right here, towards the opening candle, and then I would just play this trade out. Google likes to have psychological increments of 2.5, so the target on this trade ideally would be 182.50. Let me just put that there. You can see this trade is a 3.72 risk to reward trade. So let's just play this trade out. As you guys can see, this trade is paying. Let's see if we can get our final profit target. And we do. These are amazing examples that I just showed you guys. And if you guys can learn this and execute it properly, it's going to help you guys grow your portfolio steadily, and you guys will be very happy with your trading results. Thank you guys for watching this video, and I hope to see you in the next Stock Hours video. Don't forget to like, comment, and subscribe. I'll see you guys in the next one. Peace.